All right, guys, what's up? So tomorrow's budget, right, in India, 23rd July 2024. I gave a very detailed commentary on that on my Telegram. So if you're someone who's new watching this channel, just head over to my Telegram. You'll find the link, I believe, on YouTube or my Instagram, and you can listen to that. But the reason I'm making this video right now and continuing the series is I got a lot of interest about a concept I explained in my voice notes, and I believe that making a separate video on that would do it justice. So if you enjoy these videos and what I've been doing on YouTube, just share, like, comment. I don't like to ask, but it motivates me to create such content over and over again. So what happens in equity markets? So if I can just quickly summarize, different asset classes have, let's say you have equities, you have interest rates, commodities, currencies, etc., bonds. Interest rates are considered to be the cleanest markets for a technical analysis. You have a new government policy, the way it will affect your interest rates, you'll have a clean movement. And if you're a technical analyst, I would say that's the easiest of the markets to chart on. And the complexities and the noise keeps on increasing as you head over to the equities. And as you guys have noticed, especially what's been happening in India and all over the world in where I'm right now in 2024, 23, you got so much of noise. And the best of example I can show you right now would be Bank Nifty. Tomorrow's the budget. We know the volatility is going to kick in. The VIX has been trending higher. But if I can just show you quickly a chart that probably would make a lot of sense to all of you, would be Bank Nifty. We had a very big contraction of Bank Nifty happening in the last couple of days. We had a exhaustion gap in HDFC Bank. If I can just show you the reference that I want to give you right now. We had, I believe, an exhaustion gap on HDFC Bank and then followed by a breakaway gap somewhere over here, which kind of showed things don't make sense on HDFC Bank. And we had something like a two black gapping over here. So things were not really good in HDFC Bank. And that contributed to Bank Nifty. We got a high in Bank Nifty on 4th of July when HDFC kind of made the 52-week high. And then things have just been poor on the structure. You've got lower, you had a higher low kind of a structure heading into that. But now you've been getting, if you zoom into the internals, lower highs and lower lows. And essentially, you've not been able to break 52,800, right? Going forward, now the question comes, when do you go long and when do you go short? I was telling you about the volatility. Today also the markets tried to plunge lower in the morning, but immediately in the first 30 minutes or so, things immediately got bought into and just reversed like a liquidity trap, if I can call it that way. Another good example of that was something that happened earlier. We had a clean breakdown. Things could not have been more bearish, but another liquidity trap, you had high to 52,800. So the idea comes in, I'm not only talking about an event tomorrow budget. I'm just going to talk about normal concept. When do you go long? When do you go short? So for example, let's say you're a breakout guy. You wait for a breakout, and essentially breakout is what will lead to an establishment of a new trend. The markets have been sideways and the markets break out and you want to go long. Okay, that's going to get you a new trend. So when do you go long? The biggest problem, I would say, as per behavioral finance, if I can quote that, or just out of investor psychology, is that everyone wants to jump in as soon as possible. And that's the where the biggest mistakes come in. Whenever the market, so let's say this level is 52,800, taking the same example, and let's say this level is getting broken in on an intraday front. You want to go long immediately and just to realize that the prices actually fell lower. What I'm trying to say is, let's take an example. You have a range 50 to 800 somewhere over here. Let's say a 51,800 somewhere over here. So the markets are stuck in the 1,000 point range. And on an intraday basis, you had some kind of a breakout. Let's say you go long on that breakout and couple of, I would say, minutes later or an hour or so later, you had a specialist breakout, things again failed and then went lower. And you exit your trade just to find out sooner or later that the move had happened. So if you could have just waited for maybe the closing of the day, or if you could have waited for the next day open or the next day close, the results could have been vastly different. So in this video, I really want to compare how the results can change if you wait for today's closing, next day open and next day close. And I have a statistical data of the last 10 years to back up that research. Hope that makes sense. So I currently have something like an excerpt from my CMT book. And if you see this, what I am comparing is the last results are using moving averages. So what I'm using here is the slope of moving averages. What I mean by that is if the moving average is sloping upward, things are bullish, you go long. And when the moving average slopes downward, things are bearish, you go short. So that's a system how to trade a trend. I'm not saying essentially you should do that, or if you could, it doesn't hurt. It's actually something which is very profitable in the long run. No doubt there are whipsaws in shorter time periods. But the idea of moving averages is if you can control your stop losses in the sense that you will have only 30% accuracy if you follow a system like this. But when the trend finally resumes, you capture the fat tail. So the losses you've been doing small compounded, that one big profit is going to earn much more than what you've been losing. So that is what the moving average family or system is based on. But so what this chart is telling you is that we are analyzing the last 10 years of the S&P 500 and the euro dollar interest rate markets ending in 2011. So the 2011 say the last 10 years, those are 8 se 2011. This is what we are doing. The entries here are based on moving averages. It's just a method, but obviously you can kind of get some takeaway from these results and use it. I would not say the results will not be the same exactly, but you will get an idea what I'm trying to portray with strategies that you have. Because equities are the most noisiest markets and majority of us are trading in the equity market. These are calculation periods 5 MA, 10 MA, 20 MA, 40 MA, 80 MA. And these are like 80 MA का slope ऊपर है तो long है, नीचे रहेगा तो short, example like that. The first column is profit and loss. Second is profit factor. Profit factor means profit or divided by loss. The gross profit divided by gross loss, that's the profit factor. And euro dollar interest rate over here, S&P 500 over there. So interest rate markets, equity market over there. And entries, whether you take today close entry, next day open entry, or if the entries are next day close. If you notice over here, if I'm the shortest of the moving averages, whatever, I'm doing a strategy. And in the interest rate markets, if I'm taking the entry on the closing, I get a profit factor of 1.09. But if the entry is delayed till next day open or next day close, your profits reduce. Hope that is clear. If profit factor goes below 1, that is a loss. The strategy is a losing strategy. Same thing, irrespective of your moving averages or the strategy, if for a euro dollar interest rate market, you are getting a profit factor if you are trading on the close. So for example, if I can just take this concept on a different kind of understanding, आपका breakout आ गया एंड जिस कैंडल में ब्रेकआउट है, लेट्स से डेली चार्ट आप कर रहे हो या वीकली चार्ट है, तो आप क्लोजिंग पे एंट्री ले रहे हो, वो प्रॉफिट फैक्टर अच्छा आ रहा है. बट आपका क्लोजिंग आ गया एंड यू आर डिलेइंग द एंट्री टू नेक्स्ट डे ओपन और नेक्स्ट व्हाटएवर नेक्स्ट डे क्लोज, योर प्रॉफिट्स आर रिड्यूसिंग. देयर आर अ स्मॉल 1 or 2 एग्जांपल्स which are जैसे थोड़ा सा यहाँ पे फर्क आ गया है, बट ओवरऑल इफ यू लुक एट इट फ्रॉम अ होलिस्टिक पर्सपेक्टिव, for a 40 MA next today close will give a 1.6 profit factor, but other will give a little bit less. Thoda same tha, no doubt. But look at, for example, this example, a 20 MA 1.37 for today's close, 1.29 tomorrow open, and tomorrow close come. So you can see over a course of time, for a less noisy market, today closing entry is justified and good and actually giving the best profit. However, when you come to the equity market, things are different, which you don't understand. Or FOMO is something which is the biggest problem over here. Market में breakout हो रहा है, trade लेना है, come on, trade fast, move miss हो जाएगा. If you look at this example, look at an 80 MA example. 80 MA के अंदर, if you take a trade at today's close, meaning when the 80 MA turned bullish or changed the slope upwards, and you buy exactly at that point of time, when that on the closing of the day, when the 80 MA turned bullish, you can see that you are actually in a losing system. You are actually in a losing system because you're less than 1 total profit factor. If you delayed it to the next day open, then you actually you still are losing, but you make a lesser loss. And if you delay it to next day close, you're actually making money out of it. So something which was not profitable turned profitable just by waiting for execution, delaying it, not trading it on the closing of the day, but trading it on the next day close or next day open. Take a 40 MA example. You are getting a you are getting a loss out of this. Profit factor is less than 1, but this will turn into a profit if you wait for next day close or next day open. Loss reduces. You will see that is not the case in a 5 MA or so, because वो बहुत ही छोटा है. And अगर बहुत छोटा time frame है, then if you keep on delaying the entry, then you obviously it's very self-explanatory that you might not get the juice out of it. That is the reason why in the 5 MA you have a profit factor of 0.90 here, but as you delay it, then आपका profit factor कम हो जाता है. That's a very obvious thing. So the takeaway I want to give from here, why I introduced this video right now in this series that I've been doing on YouTube, is that kal budget hai. And as you all know, equity is the most, is the most noisiest market. Hota kya hai, budget aa gaya, and as it's a very big fact, on these event days, most people lose money. I've given you an approach how you can handle the budget and when do you know a trending move is coming based on where people are writing, what kind of losses they're looking at, when the other parties cover. It's all on Telegram. Join the channel. It's completely free. I've been doing it for the last many years now. But you can always go over there. This YouTube I'm keeping for more learning purposes and giving you logic behind certain things. बट कल क्या होता है बजट है या एफओएमसी आता है कोई इवेंट है कोई रिजल्ट्स आते हैं कंपनीज के पीपल वांट टू ट्रेड राइट ओवर देन मे बी दे हैव एन आइडिया दैट my money can become 5x, 10x. And that happens one day. I remember 2021 budget turned, markets went up 8%. So that happens, not joking. But on the other days, you're not so lucky and you actually could blow up your capital. So if you don't have a good logic to trade on the budget, if you don't have a logic to trade on the budget, I've given you some ideas, look into that. You all as an individual have different ideas. तो अगर आपके पास लॉजिक नहीं है बजट पे, so wouldn't it make sense based on what I've just explained, you waiting for the next day open or the next day close, and budget trading could then become your base for the movements to follow ahead? I'll just give you a very simple example. Let us say on the budget you eventually break out or you break down. But let's take an example of a breakout. So if the budget broke out, your markets broke out. So rather than just saying, okay, I'm going to go long by the closing and you being scared कि ऐसा तो नहीं होगा कि budget में things will reverse or next day things will reverse. If you know things are broken out and things are fine and the next day things are getting confirmed, so you have a base कि budget में things are fine. So then you can easily sell in the money put options. You can buy call options. You can buy futures. So you'll have a base to trade with. Let's say the markets give you a sideways day. You'll have a base that, okay, ये हुआ है market में. So when the market goes down, breaks the range, or when the market goes up and breaks the range, I know what to do. So rather than being so, I would say, being scared यार कि पैसा निकल जाए, because you will have slippage tomorrow. You won't have so much size on the bid-ask spreads 100% tomorrow. It's always going to be a market full of volatility. So if you don't have a lot of money, there's no point trading because small capital cannot have you will not be able to contain losses so easily. You might think I'll have a 30-point SL, but because of slippage also the SL will increase automatically. So if you don't have someone who have a big account, आपका risk reward बैठता नहीं है. So for a smaller account, I would say, ठीक है, if you can risk 10, 20,000 on a 10 lakh, like a 1-2%, it's fine. But if you don't want to take such risk and you have the kind of a mentality, I might blow up my account, try to make it a base. And if a trend is coming or being established, delay that entry to next day open, delay that entry to next day close, and automatically your results increase. That's what I'm trying to explain. Because आपने काफी बार देखा होगा that let us say market breakout कर देता है and let's say tomorrow is a 5% candle on Bank Nifty. Okay, आपके मन में आ जाएगा shit मैंने तो ट्रेड मिस कर दिया. But now अगर ये एग्जाम्पल है 3% है, लॉजिकल एक बात करते हैं. Now you know trend has started, so your job as a technical analyst is to hop onto the trend and stay within the trend as much as possible. So if for example the next day is a gap up, and you know I taught you an idea on Larry Connors in one of my videos on this series also, that if it is a gap up and you enter the previous day range, you can easily go down. Let us say that trading idea works. वो होगा तो मैं बाद में discuss कर दूंगा. So maybe just by delaying the entry to the next day close, आपको शायद better price मिल जाता. And then eventually trend तो ऊपर है ही, trend ऊपर है, आपको better price मिल गया, your profit factor increases. That's the idea, or that's just the just wanted to not only talk about everything जो मैंने आज discuss किया, not only based on the budget, but just for your overall trading, overall investing journey, that rather than being so impatient when you trading or investing, just have patience and delay your entries by a day. Things will make much more sense and you'll increase your profitability, not by having the best of strategies, but just by delaying it by a day if you trade equity. That's all for now, guys. See you soon.